Mr.Alpaca, Fundamentals in 5 Minutes. Palantir is a SaaS company headquartered in Denver, Colorado. It is known for big data analysis. The company targets customers in both government and commercial sectors. The company was established in 2004 and has not yet turned profitable by the time it went public in September 2020. Its share price rose all the way from $9.50 to $45. Since March 2021, the company went through a major correction, together with other growth tech stocks, to a range of $20 to $25. So, does this company worth our money? The name Palantir came from the crystal ball in Lord of the Rings that can travel through time and space and know everything. The original idea of the company was to use technology to build a magical ball to see the world clearly. Currently, Palantir's main products include Gotham, Foundry, Apollo. Gotham is an AI-ready operating system that improves and accelerates decisions for operators across roles and all domains. Gotham joins and enriches massive volumes of near real-time data and presents them in a single view that enables users to make faster, more confident decisions. Gotham is best at looking for a needle in a haystack. It can search for clues and review unknown correlations in non-structural data, such as emails, images, weather data, web logs, etc. For example, to track the source of mad cow disease, Gotham can analyze massive amounts of data, such as shipping manifests, customer lists, credit card records, hospital data, etc., to trace the source and find clues at a speed that is impossible for humans. A good case in point is the capture of bin Laden in 2011 and the investigation of the Ponzi scheme of former Nasdaq chairman Madoff. Foundry is the operating system for modern enterprises. The platform removes the barriers between back-end data management and front-end data analysis. It reflects real-time, large amounts of data generated by different departments. Foundry is best at allocating resources in large institutions. For example, in a case of raw material shortage for a manufacturing company, Foundry can forecast its impact on order delivery and send alerts to the management in advance to make corresponding adjustments. Successful stories include the Skywise system, which connects more than 130 airliners, as well as the COVID-19 pandemic tracking and the dispatch of medical supplies. Apollo enables continuous deployment of Gotham and Foundry across all environments. It ensures the software to operate seamlessly across on-premise data centers, classified networks, hybrid clouds. It keeps critical systems stay up-to-date and operational 24/7 in challenging conditions such as battlefields, airplanes, submarines, or government intranets. Proven cases include cooperation with the Department of Defense and FBI. As of the second quarter of 2021, the company has 169 customers in various sectors. Here is a part of the government business. Palantir is also actively expanding towards commercial sectors. Here is a quick look of commercial business. It can be easily seen that the government business far outweighs commercial business. The company has therefore been questioned by investors for its concentration on government sector. To better understand this, we need to know the three phases of business growth: acquire, expand, and scale. During the acquire phase, engineers have to visit customers to understand their needs, introduce the platforms, design solutions, and train employees. The service at this stage is often free. That's why it costs higher sales expenses. During the expand phase, the customers accept some modules of the product for testing, and the business starts to generate profits. During the scale phase, customers begin to fully accept the company's products and deploy them across various departments. This stage can generate extremely high profits. Palantir started with government business. A large number of government businesses are already in the scale phase, while many commercial businesses are still in the first and second phase. Thanks to the experience accumulated in various fields over the years, the gap between these three phases is gradually narrowing. In some industry, deployment could be achieved within a few days. Palantir is the only company in the industry that has obtained the Department of Defense Level 6 security clearance, which enables its access to classified data. This gives Palantir a wide moat against competitors and makes switching costs extremely high. The security and unique features of the products have also attracted a large number of Fortune 500 companies. Revenue per customer has risen to more than $8 million. In order to attract more commercial business, Palantir allows customers to choose specific product modules. For example, customers can purchase only ERP suites. The company also launched Foundry for Builders to lower entry cost for small and medium-sized enterprises. Compared with other SaaS companies, Palantir has a higher P and PS ratio. Compared with Tyler, which is similar in growth rate, Palantir has a P and a PS ratio twice that for Tyler. Valuation seems high. Compared with past company Snowflake, although Palantir has a lower P and PS ratio, but its growth is less exciting. So it's hard to say if Palantir is a better investment. Another reason investors believe that Palantir is overvalued is the stock-based compensation. At Palantir, employees are paid with salary and options. On one hand, it makes employees motivated, and on the other hand, it also makes the cash position looks better. But the equity of existing shareholders will get diluted as a result. As a matter of fact, as of the second quarter 2021, the stock options have an intrinsic value of $8.1 billion to be exercised in the coming 8 years. That is around $1 billion per year. Compared with the company's current market cap of $42 billion, the dilution is only 2.4%, far less than the growth rate of the company. There is nothing to worry about. Investors should pay attention to whether the company's premium can be gradually rationalized by rapid growth, especially how they manage to decrease the operating expenses as a percentage of revenue, just as CEO Alex Karp mentioned in an interview.
We're in this for the long haul. If you are speculating or you are, or you're thinking about the short term, there are plenty of other things to invest in. We're building the company we believe in. We're going to do it for the long haul. There'll be ups and downs.